On the back of everything we've discussed, some people suggest subsequent bank runs on different banks. How likely do you think alternate bank runs are, and what type of companies get impacted?
So Kris commented on the $600 billion of mismarked assets if everything were to be priced to mark to market on Monday. That is in totality across the U.S. banking system. I think the bigger issue to focus on is that around the impact of psychology and whether a bank has issues around concentration within an industry or a customer base in particular. And so there are some banks that have been named that are digital asset focused, or they might have an imbalance in their customer base versus being diversified. And I do think those banks will start to see deposit pulls just out of panic, even if they have a very strong balance sheet. There was one bank in the West Coast, First Republic, very strong bank. They put out a notice on Friday that said only 15% of our securities are, or 15% of our assets are, securities. 9% of our deposit base is tech, broadly diversified. And what they're basically saying to you is, we're not SVB. We're highly diversified. Our balance sheet looks good. Don't pick on us and create this dynamic around us. We are in a very different situation from a balance sheet point of view.
Does that make a difference? I'm really sorry, Jackie. I'm just trying to understand.
Well, hopefully. I think there's, again, lots of rumor mongering around some of these banks. There's like a list of names that people are looking at. They're creating a pretty negative cycle around looking at it, as we talked about earlier. But I think, you really have to go back and look at the fundamentals before you go into a mad panic, is what I would say to the folks who are trying to drive this type of psychology and movement in their own personal trades. And so, you have to look at the combination of psychology and balance sheet and health and make your own personal decisions.
I would say that the danger, though, is that not everybody has the financial literacy to do that sort of deep dive. And then, as Jackie had said earlier, no one wants to be the last man standing. Even if you do get it and you do feel safe, if everyone else jumps ship, you're still sunk too if the ship goes down. So I think that psychology impact is massive, and it's a big part of what the FDIC has to manage through leading into whatever it is they announce tomorrow.
Part of the reason why they want to get it sold is to provide confidence. And the more they instill confidence before Monday morning, and frankly, Tokyo opens this afternoon at 4 p.m. And so you'd want to see an outcome so that the trading days are less sloppy. You are about to see a lot of slop because Asia is going to open and no one knows what's going to happen. By tomorrow morning before the market opens, they will hopefully have made an announcement about finding a buyer.
Jackie, what can they do to instill confidence? Like, if you were in charge today, what can you do now to instill that confidence?
So I would want to see an announcement that a buyer has taken over the depository accounts, and those depository accounts will be paid out at par. That's optimal, right? And Monday morning, people will have immediate access to liquidity. Those are the three things that really matter. And so Monday, people will definitely be able to pull capital out. The question is how much. It depends on this addition of the insured amount plus the advanced deposit, assuming they do, in fact, do this advanced deposit, and I'm almost certain they will. And then the third thing is someone standing behind my deposit 100%? And so if they're able to do all three things, that really goes a long way to giving depositors confidence. And that would delay a lot of the immediate panic that could happen, because the broader amount of contagion across different industries that's unintended is pretty extreme. You don't think about companies in all different states who also work with SVB. You think of schools, you think of clubs, you think of all kinds of institutions. It's not a 1%er problem. There are employees at those companies that do all kinds of jobs. And those companies, it's the wine industry, so farm growers across Northern California. And so as much as we want to think of SVB and its clients and then its clients as being impacted, that is a broad swath of the economy right there. And because they had such a heavy concentration of small companies, they don't have the multiple banking relationships that big Fortune 500 companies would have to be able to as agilely move money. And so a lot of these companies are more limited in their immediate ability to demand liquidity and move assets all over the place to keep an ordinary course of operation. And that's what's really important for next week.
You said the best outcome there being that buyer, the guarantee of deposits. I think it's important that people do also know the worst. If that's the best, what's the worst?
So the worst is they don't announce a buyer. They announce a percentage of advanced deposit that people aren't happy with. That scares the daylights out of people. Companies announce they can't make payroll. They can't, keep their operating. You start to see little companies try to find immediate liquidity, and people are doing that now. You saw some great announcements by Ramp, by Brex, by anyone who can do payroll financing to try to immediately finance some of these companies. There's great lists going around of different companies that are doing payroll financing for folks. VCs are trying to line that up for their portfolios. I don't think everybody has access to that, though, and they don't have access to it immediately. And so you will start to see these companies who actually can't make payroll. Think about, I saw one company on Friday say they were going to do a layoff, but they can't pay severance. You have companies that pay their payroll into SVB. And so it'll have a broader market effect, but that's in the worst case scenario. I do think we are not going to get to that point on Monday. And so I think the FDIC is working pretty hard to try to not have that happen.